Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's day is November 20th, 2014. I'm going to do 5 currencies in 5 minutes. Let's get going. Let's start with the euro versus US dollar. This is on the hourly chart. What do we see about this currency pair? Well, we did break above the 125.77 level. That was only briefly. That came after the FOMC interest rate decision. You can see the move to the upside here. From there, the market did sell off. We sold off this 5-minute chart now, and we sold off when we came down to this London morning session low, this New York morning session low, and now we have the New York afternoon session low. So watch the 125.23 level on the downside for the euro versus US dollar. If the market's going to go lower, we need to get below and stay below that floor right there. Another level to consider for the euro versus US dollar is the 100-hour moving average. That 100-hour moving average is a blue line in this chart, and it currently comes in at 124.99.4. That sounds very familiar, doesn't it? That level also corresponds with the October 3rd low, which came in at 124.99.5. And so we have the low from October 3rd, which was after this sharp move to the downside and led to the biggest correction that we've seen in the euro since that time. And so that level, and also the off the hourly chart, the 100-hour moving average is a key level. If we break below that level, that's more bearish for the euro versus US dollar. Let's take a look at the sterling versus US dollar. Let's see, 38.2% retracement comes in at the 157.26. The 157.20 level is also a level of importance for me, at least. What does that level correspond with? Well, if I go to the 2013 low to the 2014 high, the 157.20 level is a 61.8% retracement. So in today's trading, after the FOMC, we went right up to that 20 level and we came right back down. And the other level of importance here is the 100-hour moving average. That 100-hour moving average currently comes in at 156.58. And although we moved below it here in the New York session for a small amount of time, less than an hour, the market could not close below that level. So that's going to be a significant level that if the market's going to go lower, we need to get below that level. Until that time, there's going to be buyers down here like we've seen in the last couple hours against that level. And then the 157.20 level is a key level on the top side. So there's a little battle going on here in the sterling versus US dollar. Let's take a look at the dollar versus yen next. And this currency pair moved to yet another new high. This new high is now at the highest level, not going back to November or October of 2007. It's going back to this month right here, which is in the month of August of 2007, because we took out the October 2007 high at the 93 level on our way to the high price for the day, which came in at the 108.14 level. We're currently trading back above that 93 level, although the market dipped down a little bit below it in the last few minutes of trading. We're back above it, and if we stay above that 93 level, it's just the upside is the way to go in the dollar versus yen. If this market is going to go lower, watch this trend line here connecting this high with this high. We went a little bit above it here, but we held it, and then we moved above it, and we found that support. That level currently right now comes in around the 117.57 level. If it can't get below that 117.57 level, then just the buyers are still in control for this currency pair. Let's take a look at the Aussie versus US dollar. Now pay attention to the Aussie versus US dollar because we have HSBC China PMI data coming out. This is a preliminary for November, and we're hanging around the 50 level in that index. If it goes below the 50 level, look for further downside pressure in the Aussie versus US dollar. The Australian dollar is being influenced by the price of iron ore, which fell sharply, and we saw that follow through selling and trading here today because of that iron ore price going down. Iron ore price going down because less demand in China. Why? Because less building in China. We saw housing prices come down. There's a glut of housing in China, and the prices are coming down, and so that may have a big macro impact on the Aussie versus US dollar, a supplier of raw materials to China. So with that said, we saw this bearish trend move to the downside. Did get this the move to the upside on the FOMC decision, but back down below 61.8, which comes in at the 86.37 level. Stay below that level. It's more bearish here for the Aussie versus US dollar. Move above, maybe we get a little bit more short squeeze to the upside, but this would be a ceiling to put a line in the sand for the Aussie for this currency pair. On the downside, the next target comes in at the 85.90 level, and then we have the low for the year, which came in around the 85.40 level. Now, the importance of this 85.40 level, you have to go to the monthly chart and look at the 2008 low to the 2011 high. 50% retracement comes in at the 85.42. What was the low price this year? 85.39. So the market held against that key level. If we end up breaking below that 85.42 level, again, look for further selling pressure in that currency pair. Finally, the New Zealand versus US dollar. What's this story about? Look at this line right here. We have a high here, we have a high here, we have a low here, we have a low here, we have lows here. We went below it here and failed. We have low here, we have low here, we have low here, low here, all coming around the 78.37 level, give or take about 10 pips on either side of that level. Watch that level going forward. If the market moves below that level, it's more bearish. My name is Greg Michalowski, and this has been a look at 5 currencies in 5 minutes. Good fortune with your trading. Bye-bye now.